Hi guys, once again this is Alfred from BinaryOptionsTutor.com. I'm here today to share a simple and a sexy little mod to our strategy that we released about a month ago. We call the drift shifter strategy. What we're going to be doing is trying to merge what's happening on a longer term chart with some of the smaller wave patterns that are going on a 5-minute chart. So very quickly, this is essentially the same strategy, but what we're doing is modifying some of our settings. So very quickly, I'm going to go through the settings and try and explain some things. Okay, we're going to start at the top and go down. This is our same 3 indicators, same indicators, same template essentially is what we use in the original strategy. I know I've harped on this. If anyone's written me, I've probably written you back something to the nature of, the more you consistently trade a strategy, the better you're going to get at that strategy. So this just gives you some other options of how to trade around that same template and the same strategy. It's still going to be trend based. So let's go through these settings. Okay, these are the settings for our channels. We've moved it. Previously it was at 10. We've moved those settings to 14. Now, how did I arrive at 14? The reality of trading is a lot of what we use with the indicators are simply based on averages and average movement, and that's the only that's one way that we have reliably gauged momentum in the actual phase of the market. So, but the downside to this is we all are aware of, there's going to be some repainting. Typically what we'll do is to wait until the next bar, or on occasion when we want to be a little bit more sure and get a little bit more sturdy of a position, we'll add 2 bars to the hour. Like for instance, this is if we're probably going to take at the longest the 1 hour trade, then we're going to add 2 bars to that hour. So 12 times 5 would be 60 minutes, and we're just adding 2 bars to that. That's how we arrived at the 14. We can go over here to our moving average arrows. You can see we're using a 3 and we're crossing a 14. We're just adding a couple of bars to that hour, and we've moved the average down from 5 to 3. An average is always going to be a lagging indicator, as we've covered in the previous videos. So we're trying to get a little get in a little bit earlier and be a little bit more in sync with what's happening really hot in right now in the market. It's still going to be lagging, but it'll give you a pretty reliable assessment of the trend and and what momentum is really going on with these crossings. Now, lastly, and this is where we got the idea for the Sexy 60 mod from, is our change to the bot CCI bars, which we're moving them to 60. This is going to give you the ability to look at the market from a longer term perspective, hopefully, and at the same time be working off of your 5-minute chart. Now, just like in the original strategy, we're using our bot CCI bars to give us an indication of what we will hypothesize to be the predominant trend. Okay, now just like with the original strategy, we're going to try and avoid these gray areas here. We're going to try and stay out of these areas. That's my suggestion, because you'll notice a lot of chop. And also, I want to point out, especially when you're seeing these these teeny oscillations, like what we're seeing right here. All this area here, these small teeny oscillations, that's telling you the same thing as price action is telling you above, which is that we're just not getting a lot of dynamics and a lot of volatility in the market. So there's a lot of indecision. It's probably a better idea to just wait it out, and as the market begins to firm up and actually give some definition to that which way it's going, then you can get in and take your position. Now, the first thing I'm going to talk about is, you can see just recently played out here on this dollar yen currency, is to just look for the start of a crossing and maybe take a longer term signal as we come out of that crossing. I especially like areas like this because you can see a lot of squeeze. This is right before a little news release, and you can see a lot of squeeze there, and you can see we got that crossing to the upside. And when there's a lot of squeeze here, just like I mentioned in my price action squeeze video, you're going to get some nice pops on in most cases. And there we saw that crossing start to firm up, and we did get a nice little, about 15-20 minute pop to the upside on that news. Now we're getting a little pullback, but again, our bars are still indicating some uptrend. So that brings me to the next thing we would be looking for, which is to take these pullbacks against what we believe to be the predominant phase of the market, and just bet those positions up. Take calls there. That's all we're doing, and we're essentially just using the same trading style, same strategy that we used with the original trend shifter. The original drift shifter. The only thing that's changing is we've just modified the template so as to give us a little bit of a bigger picture and hopefully find a stronger momentum. There's another instance right there where we can see a little crossing, and again there's that move to the upside. Or perhaps you'd have taken a pullback here to the neutral line, or all the way down to our bottom of the channel. I don't like to take these pullbacks inside of these gray areas, but at times they can be very profitable if you're outside of a major certainly any market moving news, or outside of some of those earlier hot spots with the major sessions, like we covered earlier in the video with our World Financial Markets clock. So really, that's all there is to it. We're just looking at things from a little larger perspective, and we've just made some simple modifications. If you guys are interested in picking this up, I'm going to add this template into our same drift shifter strategy, and we're calling this one the 66. Okay, sexy 60 modification, and you'll be able to pick it up on our site, binaryoptionstutor.com. One more thing I want to talk about before I get out of here. You know I'm kind of verbose, so you know it was probably coming. This is also a pretty cool way to look at trading on the spot market, because you're going to catch some pretty nice longer term moves that can stick around, a la this move right here. You can see a nice move right there. So we had that crossing, we had all of this move down, 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 down. So it's a nifty little way to also look at trading spot as well as the binary options, as well as probably a good place to look at, even if you can get your timing and everything set up properly, a strategy that's applicable on platforms like the Nadex platform, a 0 to 100 platform that's, you know, rather, well, somewhat similar to trading spot, and probably more favorable for a longer term strategy like this, especially because you're able to get into a trade and you're also able to sell out of a trade if you're wrong. Like perhaps if we would have took this crossing here, yeah, again this crossing worked, but if we weren't actually seeing that upside right there, if you were on something like the Nadex platform or you were trading spot, you'd be able to exit that trade if you're wrong, because there are going to be, even with this strategy, like, well, there's an example right here where the initial breakout came to the downside. You can see it right there. Nice breakout to the downside, but it really turned out to be a fake out. And where do you exit when something like this happens? As soon as possible is a good place to exit. Don't stick around. And also you've got this gray area right here. You really even had a lot of weakness here in the price action up top. A lot of weakness in a gray area here with these oscillations as well. And this, I'm just trying to share, the more you actually trade something like this and get some screen time in, the easier it's going to be to understand. But I'm trying to point out some areas also that I wouldn't touch, because, you know, maybe it can accelerate the learning process for some. What we want is as much on our side as speculators as we can possibly have. And so when you're seeing signs of uncertainty, wait out those areas. Now there's some gray area here, but the oscillations are higher above that zero line. Also, there's not as many bars of gray area here as we see in this little weak area here, where there's barely any actual defined trend. This is probably over the course of more than an hour. So that's just something to look at and to gather from your observations, putting your noggin into the process of reading and interpreting this chart. And again, that's really all there is to it. It's just a nice little simple sexy modification. We call it the Sexy 60. It's 60 mod on our bot CCI. We've also adjusted the channels, and we're pretty much taking, you can take longer positions coming from the mean, this yellow channel, all the way down to the bottom, and take those positions longer term. I would say no more than 60 minutes to in the direction of what we perceive to be the predominant trend. That's all I have to share today, guys, and until next time, as always, like, share, comment, subscribe. If we've helped you, please help us by sharing this information with others that you might be aware of, that might be interested, and drop by and visit us at our website, binaryoptionstutor.com.